Let's go take a look at some of your comments and questions so I can give you an answer, whether you wanted it or not. My name is Nick Kropp, I'm a CPA, and I debunk bogus tax tip videos that you see across the internet. So what is a business if it's not an LLC? Well, this question is quite apropos to the video that was just made. But understand this, a business is essentially a venture that you go out into, you're going to be selling goods or services in order to produce a profit. An LLC is simply a limited liability company. It's the legal formation for a company, right? It gives me the rules that I need to follow in order to create separation between my business and myself personally. That's it. Those are the differences between the two. I can have a business without an LLC. It's called a sole proprietorship. An LLC, just simply legal protection for myself and my business. Can you explain the $7,500 tax credit on EV vehicles? What happens if you always get a tax refund each year because you withhold more than you owe on your paycheck? This is a question that people ask all the time with these non-refundable credits. A non-refundable credit just means that if you don't have enough tax, you will not get this credit in excess of the tax that you actually owe. For example, let's say you have $100,000 of income, and that's going to result in $10,000 in tax liability. You owe $10,000. That number comes before what you had withheld from your paycheck, because guess what? The money you had withheld from your paycheck is just a prepayment of your taxes. So, let's say you had $15,000 withheld from your paycheck. That means you're going to get a $5,000 refund. But that does not affect this $7,500 EV credit. Because you had $10,000 in tax liability, you can actually take that full $7,500 credit. It reduces your taxes down to $2,500. And that means your $15,000 in withholdings will now result in a $12,500 refund. That's fantastic. And it's still not refundable. It just meant that you had less tax and you had so much withheld during the year. You paid the government so much more money than they deserved. You gave them a great loan during the year. On the flip side, let's say you only had $5,000 in tax liability. Let's say you made $50,000 in the year and you only had $5,000 in a tax liability. Well, I don't care, again, what your withholdings are, it's just a prepayment of your taxes. That means that that $7,500 credit can only be used up to the $5,000 that you owe in taxes, which means you're going to lose $2,500 in a credit, but you're not going to owe any tax that year. Whatever you had withheld will be refunded to you. Phil McTimony says, how about, we don't try to dodge taxes for the good of society? Nah, dodging taxes or tax avoidance is a purely American thing to do, and everyone should do it. You know what taking the standard deduction is? It's avoiding taxes. You don't have to take that. You could not take the standard deduction. And guess what? You would pay more in taxes for the good of society, Phil. But I don't recommend you do that. I recommend taking as many of the deductions as you possibly can and pay as little tax as you legally have to. There's nothing wrong with it. Do not evade taxes. That's tax fraud. But there's nothing wrong with avoiding taxes. In fact, it's the most American thing you can do. Lastly, let me leave you with a tax tip of the day. Did you know that you can set up a SEP IRA up to the extended filing date of your tax return? What that means is, if you have a business that is extended from March 15th to September 15th, you can actually set up a SEP IRA in between that time, up to September 15th, and contribute to that SEP IRA for the prior year, which means in 2023, if I set up a SEP IRA for my business before that extended filing date, I can then contribute up to the max of whatever I'm able to contribute, 25% of my earnings or wages, and it will count as a deduction for 2022, even though I paid it in 2023. Pretty sweet. And if you're on a Schedule C, that means you have until October 15th of the year if you're on extension. So do keep that in mind. That is not a lost option. It's one of the few retroactive deductions that you can take in the year after the tax year is ended. Thanks so much for watching. Be sure to like, subscribe, comment, and hit that notification bell. And be sure to check me out on my other social media channels, TikTok and Instagram, where I have other short form content like tax tip videos or other debunk videos. And be sure to tag me in any videos you see across those platforms as well so I can comment on those, maybe in a YouTube video or just on Instagram and TikTok. Again, thanks so much for watching, and I'll see you in the next video.